Hello everyone. Today we're going to be solving two problems from chapter 6, which are exercise 6.5 and problem 6.10. And first we will be solving exercise 6.5, and it says that on June 3rd, Bolton plc sold to Arquette Company merchandise having a sales price of £2,000 with terms of 2/10 and /60. An invoice totaling £90, terms 2/30, was received by Arquette Company on June 8 from John Booth Transport Service for the freight cost. On June 12, the company received a check for the balance due from Arquette Company. Now for the instructions, we have A. Prepare journal entries on the Bolton plc books to record sales and receivables for all the events noted above under each of the following bases. 1. Sales and receivables are entered at gross selling price. 2. Sales and receivables are entered at net of cash discounts. And instructions B. Prepare the journal entry on the basis A2, assuming that Arquette Company did not remit payment until July 29. So first, for requirement A1, we have to record sales and receivables at a gross selling price. The gross selling price method does not recognize the discounts before they're actually incurred. So, for example, in this situation, we will be first recording our accounts receivable and sales revenue in an amount of 2,000. And after we know that the client actually has used the discount that we have provided within the appropriate terms, then we will recognize the discount that we have lost from our revenue. But first we will say that no, the sales price is 2,000. That is why we will be recording everything in 2,000 first, because we don't actually know whether or not our client will use the discount and will be able to pay the amount within the appropriate discount terms. So first, on June 3rd, we have our accounts receivable increased by 2,000, and then we have our sales revenue increased by 2,000 as well. This is June 3rd. And then on June 12th, Arquette Company has actually paid the total amount. So that is why we can recognize that they have used the discount, because it's within the 10 days after the sale. And because it's within the first 10 days, we can say that yes, there has been a discount of 2%, and we will recognize it. And yes, we will receive only 98% of the sales price from Arquette Company. And this is how we're going to record it. So, of course, we have gotten cash. However, we have also given a sales discount. And then we, of course, credit our accounts receivable because they have decreased, because the amount due has been paid. And accounts receivable will decrease exactly by the same amount that we have debited on June 3rd. And as you can see, in debit, it also has to be 2,000. And for that, we take cash. Well, not actually for that, but the logic is like that. For cash, you take the sales price, which is 2,000, and multiply it by 100% minus 2%, which is discount. And this way, we will know the amount that we have received from Arquette Company, which is 1,960. And for the sales discount, we will take 2,000 and multiply it by the sales discount percentage, which is 2%. And now, as you can see, the total debits match our total credits, which indicates that everything is in balance. Now to the requirement A2. Sales and receivables are entered at net of cash discounts. So At the net of cash discounts method actually does the other thing, like a completely polarly different thing from gross selling price. It says that actually, since we have given a discount, we recognize it, whether or not our client will be able to pay the amount due within the appropriate time period. We will still recognize the existence of discount. And that is why, under net of cash discount method, we will record the transactions in the following way. So, firstly, we will recognize accounts receivable not 2,000, but at the net of cash amount, which is the same 2,000 pounds multiplied by 100% minus 2%, which is what's wrong? Percent. Yep, 1,960. And we will do the same with our sales revenue. Now, on June 12th, we say that we have received our account receivable. So that is why we will say that we have received cash, obviously, and then we will credit our account receivable account by the same amounts. Now, requirement B. Under this requirement, we assume that Arcade company they were not able to pay off the amount due until July 29. That would mean that they have paid on July 29, but we know that our discount works only within the first 10 days after the sale. So that would mean that we have to say that we have received not 1,916 cash, but 2,000, because that is the whole amount. However, we know that the initial account receivable that we had, it had been simply 1,960, so we will still decrease it by credit. However, as you can see, there is a difference, which is under this method, it's called the sales discount forfeited. Which is 40 pounds. And that would simply mean that, yes, it's not actually revenue, because initially we offered 40 pounds discount. However, it was only depending on our client's ability to pay off the amount due within the appropriate terms. And since we initially thought that they would be able to do that, we will call it sales discount forfeited, not revenue, because technically it's not revenue. And that is why under the net of cash discounts method, we will say that the 40 pounds that were on the gross selling price considered to be a discount, now we will call it sales discount forfeited. And one interesting thing from this exercise is that we also have an invoice which totals 90 pounds that was received by Arcade on June 8th from John Booth Transport Service for the freight cost. And one might think that we have to record this transaction as well, but actually we don't have to do that, because it only relates to Arcade company and John Booth Transport Service. But we have to record the transactions for Bolton PLC, so actually it has nothing to do with our company, which is Bolton PLC. And that is how we solve this exercise. It's actually quite easy, and it shows us what are the differences between the gross selling price method and net of cash discounts method in accounting. Thank you. And right now we will go to problem 6.10. 6.10. And the problem 6.10 says that Selena Ltd finances some of its current operations by assigning accounts receivable to a finance company. On July 1st, 2025, it assigned under guarantee specific accounts accounting to 150K. The finance company advanced to Selen 80% of the accounts assigned and 20% of the total to be withheld until the finance company has made its full recovery. And we also have to less a finance charge of 0.5% of the total accounts assigned. On July 31st, Selen Ltd received a statement that the finance company had collected 80K of these accounts and had made an additional charge of 0.5% of the total accounts outstanding as of July 31st. This charge is to be deducted at the time of the remittance due Selen from the finance company. And on August 31st, 2025, Selen received a second statement from the finance company together with a check for the amount due. The statement indicated that the finance company had collected an additional 50K and had made a further charge of the balance outstanding as of August 31st. So, what we are gonna do right now is make all entries on the books of Selen Ltd that are involved in the transactions above. So first we have July 31st. On July 31st, we have received cash from the finance company, and we have also paid a finance charge, and we have also recognized the existence of our note payable, which we'll have to pay back later. Well, actually not we have to pay it back. It's like the company will take our accounts receivable immediately to itself. So the accounts payable that we in total have to pay to the finance company will be equal to 150,000, and I will be deleting the last three digits, the last three zeros, because it will take too much time and we will get confused to write all of the zeros. So we will simply take 150K and we will multiply by 80%, because the company said that first I'll give you 80% and the last 20% I will give to you after you pay back the first 80%. And the finance charge will be equal to the total amount, which is 150K, multiplied by 0.5%, which will be equal to 750 yen. And the cash that we receive is the note payable less finance charge, which is quite easy. Now we will go to July 31st. And on July 31st, it is said that we had 80,000 K of accounts receivable, and our clients had finally paid it back. But as you remember, we will not be taking 80,000 K immediately ourselves. It is all attributable to the finance company. So that means that we have our accounts receivable decrease by 80,000. However, we have also decreased our note payable because the finance company had taken it immediately. However, it also says that the company had made an additional charge of 0.5% of the total accounts outstanding as of July 31st. However, this charge, it's not paid immediately, it's paid only later. It's paid later, so we have to recognize the payable account. And first we have to calculate the total accounts outstanding as of July 31st. And to do that, we have to simply do this. So now you can see that the account outstanding as of July 31st is 70,000 because the initial loan amount is 150 and we have already quote-unquote paid back 80. so we have only left 70 to receive. And from the 70, we will take the 0.5%, and that would be our finance charge. And that would be our, let's say, finance charge payable. And that would be 70,000 multiplied by 0.5%, which is 350. And now we are done for our July 31st records. Let's highlight this. And now we are done with our July 31st records, and we can go to August 31st. On August 31st, what happened is that the finance company had collected an additional 50K and had made a further charge of 0.5% of the balance outstanding as of August 31st. So what we have to do is we have to take into account that, if you remember, we have paid back 80,000 and the total note payable that we have to pay back as of now is 40,000. So we have to decrease note payable by 40,000 by debit. However, the finance company had taken 50,000, and the difference between 50,000 and 40,000 is 10,000. And where is this 10,000? We don't know yet. They actually have to give us cash, but it will not be 10K. We also have to deduct the finance charge as of July 31st, and we have to deduct the new finance charge. So what we're gonna do is we're gonna calculate our new finance charge, and to do that we have to calculate our balance outstanding as of August 31st. So let's just simply copy this. Paid back July. And we have paid back more, which is 50,000. 50,000 is not here yet. And we can say that our account outstanding as of August 31st is 20,000. And according to the problem, we have made a finance charge which will equal accounts outstanding multiplied by 0.5%. And we also decrease our finance charge payable because we have paid it out. And we have also decreased our accounts receivable by 50,000. And you see, the remaining amount is the cash that we receive from the finance company, and we're just gonna take it like this. And that's actually the whole problem. So it's quite easy, and we can just highlight this, and I hope it will help you in understanding the way that accounts receivable, assigned accounts receivable work. So thank you for your attention.